All right. So recording. All right. Hey, everyone. Welcome. It's Naomi Wolf of DailyClout, and I'm really, really excited, although obviously in very serious circumstances, to be privileged to interview a valued and precious advisor of this company, Charlotte Walker, who's going to be talking about the CARES Act, which is very much in the news, but as usual with important legislation, no one's seen it effectively. Charlotte is one of the most informed people about this, so she's going to explain it to us. So Charlotte Walker is an advisor and board member to a number of early to mid-stage tech companies, including ours, of course. And she's also a highly successful entrepreneur and former startup early-stage venture capitalist who's brought a lot of really exciting, important companies to grow and to flourish. And her passion is innovation and the business and capital formation process. So to those of you who don't know fully what that means, you're in luck. I didn't know fully what any of these worlds meant until I met Charlotte. She's been a really critical mentor, helping us as a company move forward and avoid pitfalls. And she's really kind of a genius at what she does. But in addition to being a genius venture capitalist and entrepreneur, she's incredibly good as a teacher and explainer. And so we're in a time, and this is a long preamble, I'm almost done. We're in a time where we're being asked as American people to sign on to a $2 trillion contract that we haven't seen. So Charlotte Walker has dived deep into this, the S3458 Coronavirus Aid, Relief, and Economic Security Act. She's written an incredibly important op-ed, and she'll explain it to us and answer our questions. Now, welcome, Charlotte Walker.
Naomi, I couldn't have asked for a better introduction. Thank you so much. I'm blushing. So where do you want me to start? Because this is a big deal.
Yeah. Well, why don't you first tell us, in a nutshell, what did you write in your op-ed, and why are you taking time out of your busy schedule and many commitments to explain the CARES Act, which is the colloquial name for this, to the American people? It's very much in the news, but our mission is, to not ask Americans to sign on to something they haven't seen. Very few people get it. There's a lot of spin on both sides. Why did you write this piece? What does it say? And why should we care?
Well, the act hits at some key areas that I think have been shortchanged over the last 30 years. In my career as an entrepreneur and analyst in the financial world, out in the tech world, et cetera, what I have seen over the last 20 years in particular is a favoritism towards big business versus small business. And that, in my opinion, is hurting small business and innovation in this country and will come home to roost very, very soon. So what this bill has done is, again, favor big business. Not that there isn't a very sizable package for small businesses. There's this $367 billion package for forgivable loans to small business to cover payroll, employee leave, rent, and other expenses. But there's over $500 billion for corporate bailouts. This does include state and cities, but it does suggest to me that the small businesses is getting shortchanged yet again. And to put that in perspective, let me just say the following. Small businesses have been the fastest and hardest hit. The small businesses are the local mom and pop stores in your town, around the state, et cetera, up to about 500 employees. And as all towns have closed down, all non-essential businesses, these businesses have stopped. A large part of them have stopped. I walk down the street and I see restaurants are still open for takeout only, but some of them are doing this for the very first time. And that's just one business.
Sorry, you're in Connecticut too.
Yes. Small businesses employ nearly 50% of all private sector workforce.
Wow.
And they create 2 out of every 3 net new jobs in the country, period. They are the engine for our economic growth. They also happen to lead the way in innovation, generally generating more patents per employee than big businesses. So this is a very, very important economic sector. And the owners are you and me.
Right.
They're individuals generally.
Right.
They're not venture backed. They're not they don't get big loans from banks. They're under intense scrutiny. They have to pay higher costs for all of this. They're generally paid less than big corporate executives and all that sort of stuff. And they provide employment for their localities and other things. So getting capital to them in the form of loan guarantees and that sort of thing puts capital to work immediately in the economy, and ensures a very healthy recovery as we get out of this mess. So that's my big story there. I don't think, frankly, that we should be in the business of corporate bailouts.
Right.
Those those corporations have a fabulous theater for determining their worth. You know, the big banks, the capital markets, the venture capitalists, the private equity firms, all these highly educated, very skilled scrutinizers of businesses, can come to the fore and help these corporations. Why are we, the low little taxpayers, getting involved in this?
So thank you so much. I knew that you would give an incredibly compelling and understandable big picture explanation. I personally haven't heard such a good explanation yet. I want to break that down a little bit even further, because you have explained why, in your view, small businesses are the engine of the economy. If we want to avoid a Great Depression, avoid 50% to 30% unemployment, which are numbers I've been seeing bandied about, the best thing, if I'm restating what you just said, correctly, is to protect our small businesses. And you've also explained how they're more vulnerable than large corporations. You also explained what a small business is better than anything I've heard. I'm surprised that the definition of a small business is up to 500 employees. It really means that this is, many, 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 many substantial employers, except giant corporations, basically.
Correct.
Right? So that's, and I want to separate out, to come back to it, your point about these big corporations having other sources of rescue, because that's something that I'd never heard explained so well before, why we shouldn't be in the business of bailout. So let's bracket that one. We're going to come back to it. And let's go back to the bill and what it does to small business. First, I want to just validate from my experience reading the bills as a non-specialist that I've been noticing and talking about this since 2017, when I began reading congressional bills. Small businesses have been under attack, and nobody knows this. Very few people know this. Bill after bill after bill, which seem unrelated to small businesses, put burdens on small business, transfer assets or help from small business to larger corporations, make it harder and harder for small businesses to operate, put more and more red tape on small businesses, as you said. You mentioned payroll, you mentioned loans, but I've seen this with my own eyes. It's like a war of Wall Street on small businesses. And it's very hard to understand unless there's kind of, I don't want to get I'm often accused of being conspiratorial, but when you read the bills, you see there are silent interests that have helped draft this bill, and it has a certain outcome. It does seem like corporations are at war on small businesses, or someone's at war on small businesses.
Yeah.
So do you want to speak to that?
Well, I don't think it's intentional. The reality is, excuse me, that small business is riskier, and banks very naturally shy away from giving loans, or they have very high expectations for what contingency should be involved with that loan. A small business, I've looked at loan deals for small companies that are generating revenue and are profitable, but in the sub $10 million range, which that I would characterize as a company that is more prevalent in the small business market than a company that's 20, 30, 50, 100 million in revenue or a billion. They're paying high teen percents of interest. I mean, it's absolutely incredible to me that is happening. But that is how the bank sees the risk profile of that business. And that's problematic. And there's all sorts of state programs, local programs that do try and overcome these things, but it's usually too far and few between, not enough time, too many people in the middle of it.
So you're saying capitalism itself and the way financing is structured already makes it tougher to be a small business than a big business, basically, in order
Correct.
to access to capital to grow. And now let me explain, and this goes to your second point, or ask you to explain, when you say large corporations have other sources of funding to evaluate them and give them money, and you mentioned a lot of things ordinary people aren't familiar with, how they operate, like venture capitalists. Can you explain that? Why should we not be in the business of making loans from our government to giant corporations as opposed to small businesses?
Well, we have an incredibly large private equity industry here in the United States and in North America, globally, for that matter, with billions and billions and billions of dollars. They know a good deal when they see one.
So what is private equity? Just so people understand the difference between a small business going to, Wells Fargo or their local, bank and saying, please give me a loan for my bakery to, make more cupcakes. What's the difference between that and a large corporation turning to a venture capitalist?
So a private equity firm is generally involved in providing financing for companies that are later stage. They're not startup or early stage or small business. They're probably have more than 500 employees, et cetera, et cetera. They're more mature. They have a revenue stream that's substantial and stable, and they may or may not be growing, but private equity are run by partners who are professionals in financial analysis, potentially in the industry that they're investing in or industries that they're investing in. They might include actual operators, people who have managed companies before, and financial analysts who know how to tear apart a balance sheet and to create an appropriate lending instrument or equity instrument, investment instrument for an investment in that company.
Gotcha.
Some of them buy those companies out and try
So
and restructure them.
you're saying mature, large companies that are profitable, or at least, not losing money, that have more than 500 employees, have lots of other sources of
Correct.
funding, even in a crisis, than banks where little small businesses are trying to get loans at double-digit rates. Is that what you're saying?
Correct. Yes.
Okay, so I want to break out. So thank you for that, because I think a lot of people hear, private equity bandied about and venture capital bandied about, don't really understand what it means. But I hear what you're saying. It's almost like a separate economy, right?
Yes.
Okay, where people can, circulate money and circulate opportunity, and are not exposed to the risks of investing in small businesses, but also have access to lots of funding,
Right.
people who can take higher risks than ordinary banks with small businesses who are lending to them at high interest rates. Is that an accurate summary?
I think that's a good summary.
Okay, interesting. And let me just add one more thing. There is also a division, almost a class division, in who can invest. I was surprised to find this out. But if you're not a high net worth or institutional investor, you can't even invest in some of these companies. Isn't that right?
That is true. You have to have $1 million net worth, excluding your house, all that sort of thing before, and those actually are protection measures. The Securities Exchange Commission and other Congress realized many, many, many years ago that, this is a high risk proposition. 9 out of 10 early stage or startup companies fail. Many small businesses fail. But, and so this is a protection mechanism actually for the investor.
Yes.
Although it
Yes.
does work against them too.
Thank you. You anticipated what I was going to say. It definitely started out, I think, in the wake of the Great Depression, right, to
Yes.
protect investors from being hoodwinked, from people who would take all of grandma's savings and say you're going to get a giant return. However, the bottom line is the really, incredibly kind of highly funded. I'm thinking of like like Skype, for instance. I can't invest in Skype, right? Because unless I meet a bunch of high net worth criteria, or unless I am part of some of these private equity funds that, can see value and put in value at a very high level. So that too creates even people who want to take that risk, even ordinary people who are well informed, in a way that people couldn't be well informed in the past, don't have access to investing in some of the same companies that wealthier people or people working through private equity firms are able to invest through.
That's
Isn't that correct?
true. Yes,
Right.
and to invest in a private equity fund or a venture capital fund, you have to be a high net worth individual.
Which is extraordinary, right? I mean, I get what that does, but what I'm stressing is we really are in a two-tier economy in which most people can only invest in certain instruments that take really high commissions, for instance, or they can't see something skyrocketing in value and say, I want to be part of that necessarily. And then when they're trying to sell their own cupcakes, they have to go to Wells Fargo and say, please lend me money. And it's at these exorbitant rates. So it really is an economy that disadvantages people who are not already advantaged when it comes to people being investors. Isn't that correct?
It is correct. And it is a conundrum that I have contemplated quite seriously at times. It's a problem.
So thank you for helping us lay that out. And I'm not asking you to make a conclusion about what should be done, because there are solid voices on both sides. I just think it's extraordinary when you tease out who gets to be part of capitalism. The narrative about American capitalism is that it's free for everyone and it's a meritocracy. But in fact, when you look at, what the regulations are, really there is more than one economy. And so what you're saying is that this bill, or your piece as I read it, says this bill really over privileges this second economy of wealthy investors with these sophisticated instruments and large corporations, and they're getting bailout money, right? And I'll read the language in a minute. Whereas all the rest of us, or especially small business owners who are so important, do not get enough of these stimulus dollars, and the terms are different. So let me just read some of the things you've bulleted out. There are direct cash payments to Americans estimated at over $300 billion. And I know people are excited about that. I think we have yet to pin down the details, because I've also looked at language in the draft that seems to indicate that that's going to be in the form of a tax deduction, right? So I don't know that people are getting checks. So before people get too excited about what President Trump is up to or what Congress is up to, let's make sure people are getting actual checks, because they'll need it. Second bullet point, $350 billion for forgivable loans to small businesses to cover payroll, employee leave, rent, and other expenses. So I think we agree that's a good thing, right? You're in favor of that. But you're saying it may not even be enough. What is a forgivable loan?
Well, that means that the loan has extenuating contingencies. It can be paid back after you get back on your feet.
Right.
It doesn't have to be paid immediately. It can be paid out over an extended period of time. All that sort of thing, and it can be forgiven under certain circumstances.
I see. So basically, I'm going to assume that's at better terms, or those are better conditions for taking out a loan than the double-digit percentages at the bank for the crisis. So that's fantastic. 500 billion, and here's where things get really tricky, in emergency relief. What an interesting phrase. To businesses, states, and cities through the U.S. Treasury, meaning our tax dollars, including 425 billion in loan guarantees. This includes 50 billion for airlines, 8 billion for cargo air firms, and 17 billion for firms deemed critical to U.S. national security. This measure includes a prohibition against stock buybacks, so that's some oversight by corporations that receive federal dollars, and imposes a 2-year limit on executive compensation. So this is the giant chunk of the pie that's much bigger than the chunk of the pie going to small business owners. It does seem to have a little bit of oversight. Let me just add that in drafts I've seen that the Republicans are proposing, they're proposing billions for, quote, large businesses, which could mean corporations, without this oversight. And the bill that we read, a version of this that went through earlier, that was proposed earlier, didn't have any oversight at all. So the fact that you found a version with some oversight, what this means is you can't take that, you know, say I get $1 billion for my large corporation. I can't give 90% of it to my for stock buybacks, which is what airlines did in the last bailout. Like, people are very upset about that. And I can't write myself a check as CEO for $1 gazillion of that, right? So that's some oversight.
Right.
Tell me what's wrong in your view with that number and those conditions going to large businesses and corporations.
Well, I'm not opposed to emergency relief to states and cities, you know, who are dealing with, you know, an emergency crisis. They don't have the personnel, the supplies, et cetera, et cetera. Take that out separately, because that is for the public good. But the loan guarantees of 425 billion to, you know, be issued by the Treasury, that's another thing.
Is that good in your for the Treasury to a guarantee?
No. I think this is something that was tried during the 2008 financial crisis with the bailout of General Motors and Chrysler. And I think the jury is still very much out on whether that was the right thing to do or not.
Right.
There will be people on the hard right and the hard left of this equation. I'm seeing it already in the Twitter sphere. I myself am very much on the right of this, i.e. conservative, because I do see very plainly the access to capital that these organizations have, and I see very plainly the choices that the management teams and boards of those companies have made. As a startup entrepreneur, we always planned our business with 2 years of working capital. We always wanted 2 years of working capital so that we knew that our employees that we were hiring were secure.
Right.
Now, why wouldn't you, as a large corporation, make sure that you always had 2 years of working capital?
So is that what it's caused by? Is that these giant corporations are over leveraged again and don't have 2 years of working capital to keep people employed? Are you kidding me?
That's exactly right. That's what's happening.
Why don't people understand that?
Well, it's hard for me to understand how a board of directors could allow that to happen. You know, so
2008 all over again. Everybody's over leveraged and they're too big to fail. So once again, the federal government, the Treasury, has to rush in to guarantee that they will not fail in a contraction because they didn't set aside 2 years of operating expenses. Is that the bottom line?
That's the bottom line. Yeah.
So this is almost, I mean, I tend to be cynical, but it's almost like after the first bailout and no consequences effectively for all those giant corporations being over leveraged, it's almost like a business model. You know, when times are tight, turn to the federal government for more of a bailout. And in the meantime, that all your money, leverage all your money, don't take care of your employees. Do you see that, or am I overstating?
Well, no, I think you're not overstating it. I think that because of what occurred in 2008 with the bailout of General Motors, I think you see businesses thinking like, Boeing. This is why Nikki Haley left the board, because she didn't think that they should be, putting out their hand to federal government. and kudos to her for that. I think there has been more and more. Uncle Sam will get us out of trouble if we're in trouble here. We
Right.
didn't
It's
cause this
right.
problem.
Right.
But what happened
Is
during Second World
though?
War and the First World War and all the other wars that have other natural catastrophes? Did the government bail corporations out? No, they didn't.
Isn't there a
So
risk? I'm sorry to keep interrupting, Charlotte. Go ahead.
Well, the other thing I wanted to say is that I do believe that the capital formation process and business formation process is somewhat Darwinian. And I
Right.
think it's important that that process stay intact because you can't put bad money after, bad companies. Good companies figure out ways to survive under stressful circumstances and national emergencies and all that sort of stuff. And they do things that they wish they didn't have to do, whatever, but they come out stronger, typically more innovative, more nimble on their feet, et cetera, and they grow and contribute to a healthy economy
Right.
and better competition and on and on and on, more innovation. And that's what we're not seeing here. We're seeing innovation being hit on two fronts in small business and the discrimination against small business, and on the national level with large corporations expecting to get a handout or bailout from Uncle Sam, from taxpayers
Mary.
who
Well,
are just don't have the resources of any of these folks.
absolutely. Well, when you spell it out like that, it's really stunning. Ordinary Americans who are desperate, living paycheck to paycheck, may be getting a $1,200 check or tax deduction. It's not clear which. This bill has expanded unemployment insurance with waivers of the ordinary requirements so applicants can look for work. So there's like very de minimis help for ordinary people, right? But
Right.
but what happens, and the language is so tricky, is it says 500 billion in emergency relief to businesses, states, and cities through the U.S. Treasury, mushes them all together, doesn't break them out. We certainly need, say, 400 billion for cities and states, as you said, to keep everyone employed, keep hospitals open, keep roads open. But absolutely, I hear you that capitalism is supposed to be weeding out the bad companies and
Right.
and and not propping up bad companies and leaving ordinary people to struggle. Like, I know that you're conservative in saying you believe it should be Darwinian, and I'm persuaded by that, but you're not an uncompassionate person. And I know that you also think there should be supports for desperate people in times like this. So it's
Yeah.
not either or. But now that I've spelled out that 500 billion smushing together large corporations and cities and states, and we don't even know, is it going to be 450 billion to corporations and 50 billion to cities and states or less? There's no way to know. But now I want to get to the most stunning number: 1.32 billions of funding for hospitals and healthcare providers. I'm going to say that again.
Yeah.
500 billion for businesses, states, and cities. No breakdown of which is which. 1.32 billion, right? So that's
Yeah.
like what is that? A single digit percentage.
Yeah,
Billion.
these are the front line risking their lives, et cetera, et cetera. Yeah.
Fighters, the front, as you just said, the front line people risking their lives, not enough ventilators, not enough masks in the richest cities, in the richest country in the world. And out of all of your taxpayer money, the Federal Reserve stepping in, shovelfuls, hundreds of billions going to large corporations, 1.32 billion to hospitals and healthcare. What do you want to say to that?
It's pretty stunning, isn't it? Yeah, it's shocking.
What do you, in
I
your dream world, what would the proportions be for this bill?
Well, the top priority should be put on the healthcare system right now. There have been other bills that have been passed that have addressed that, and on the order of $8 billion. I think the House bill went, and that was passed and endorsed by the president. But these are paltry numbers, and we could debate no end how late we have been in responding on a national level to this crisis. So much of this could potentially have been saved. You can't cry over spilt milk, but here we are. Yeah, that is it. It is a really stunning number.
It's extraordinary. And honestly, this is the first time I've ever heard these numbers laid out so clearly. Like, it's so important that you're explaining this. I just want to add, I was stunned on Twitter to see a well-known hedge fund guy. I think his last name's Ackerman.
Ackerman, Bill Ackerman, yeah.
Pershing Square Group, saying very baldly, this is the opportunity, this crisis is a great opportunity if we manage it correctly. And I sort of went, wait, are people hedging on the depression? Have you seen any of that? I mean, do you know what I'm talking about?
Well, not really. I think what I've heard referred to is that, clearly we've seen stocks really go into the toilet in these last several weeks. And it is an opportunity for the savvy investor because this too will pass. I mean, it will. Every major crisis we have overcome in some form or another. So from an investor perspective, it is an opportunity. Don't catch a falling knife, but do wait to figure out whether the sentiment is so extremely negative. Now is the time to buy stocks and be careful.
Well,
that may have been what he's referring to.
Right. I hear what you're saying, but how can I put this? Do you think in a national crisis like this, influential members of the financial community, like Bill Ackerman, have an obligation? Like, he was giving interviews that were basically saying, shut it all down, and driving the stock market lower and lower. And I don't know what he's invested in, but it looked to me like, he might have. I think betting against the U.S. economy in the short term is a good bet, if you're a hedge fund guy. So to me, that looked like not kosher market intervention. I guess what I'm trying to say is, do you think influential members of the financial community have a certain obligation to, like, restrain their language for the common good right now, even if they can make money on a plummeting market?
Yes, I think that the leadership in financial markets should actually be providing assurances and solutions. I know here locally the Dalios are providing funding for the healthcare providers and the hospitals.
And who are their local community members?
Ray Dalio is huge financier and well-known hedge fund manager. So I think his company is Bridgewater. I think that more examples like that would be more helpful to local communities, and that sort of leadership also shows priorities. What are the priorities? And the Dalios have notably stayed out of the press with respect to any comments about what is going on, rather silently pulling funds together and putting them to work in the local communities. So I think those are the kinds of things that, the big time financial icons should be doing. Right. And then providing hope. This is, Naomi, by the way, a very large opportunity for our government to get it right. The government does do certain things extremely well. We haven't seen that working very well lately, but it has mechanisms in place that can be activated that could be extremely helpful in this crisis. And also, government is the investor of last resort.
So tell me what President Charlotte Walker would do in this moment in terms of mobilizing both the federal government and, cheerleading the economy, what would be your dream narrative for the next little while from the president?
Um,
Federal government.
well, allowing the healthcare workers to dictate the next steps and what should be provided, and activating all the necessary protocols that need to be activated in order to get manufacturing up on masks and all the things that matter, and supplies to hospitals, and on and on. That would be the first priority. I would pass this bill, but not with the big business bailouts, and the agricultural bailouts that are also out there, although I will sympathize with farmers because of this tariff situation. We've had the highest rate of bankruptcies amongst farmers in the last 12 months. So those are major issues, and can argue that maybe that should be included in this bill. But it's mixing, issues.
Right.
Farmers provide food, and we're eating food. It's not a business that's suffering right now because of this crisis. So anyway, I think getting this bill passed without the big business bailout would go a long way, and
Save billions of
perfectly.
dollars for hospitals and healthcare providers and equipment. Last question I want to ask, and then I'll let you go. You've been so generous with your time and expertise. We talked offline about how hard it was to get the draft text from both sides. And, we at DailyClout, with your guidance, have been so focused on everyone's right to see the bills. And can you speak to how hard it was to see the language and the fact that no one has a draft of this bill before it passes?
Well, you can't get any updates on, the government tracking sites either, because the text is literally being written as we speak. It's a big problem unless you have somebody on the inside who can hand you the drafts as they are being generated, and or at least can summarize what the text amendments have been. You're not seeing the full context of the bill, and period. You're not seeing the full context of the bill.
Absolutely. And then the American people are blindsided, because once the bill is finalized and it gets submitted for a vote, it's already too late, to
Correct.
with this or that provision. The last thing I want to say to this point, it's so important, is I'm seeing on Twitter a lot of disinformation or unverifiable spin about this bill on both sides. I've seen Republicans claim that page 750 has harvesting of ballots and no voter ID, and I looked at that language and it doesn't say that, but I can't verify that the draft I'm looking at is the draft. I've seen claims that there's money going to wind power, that there's money going to minority-owned banks. I haven't seen it. I can't verify it. So to you as someone in the financial services industry or financial industry, to me as a reporter, it's maddening that we can't sit here, you and I, and deliver to the American people verified language of what the draft is, what the clauses are. So I'm just putting out there that going forward, we at DailyClout, I think, should really push for real-time draft updates from our elected officials. It's not okay that we're in this medieval situation that rumors are flying, and when the bill goes to Congress, it's already too late for the American people to weigh in on it. I think there's no excuse for that in a digital era. What would you say to that?
I would agree. There is no excuse. Once there's a new draft that's available to Congress people, it should be available to the people of the United States. Period. End of story.
Absolutely. And on that note, we could talk about this all day, but you've been so incredibly informative. Charlotte Walker, valued and trusted advisor to DailyClout. We couldn't have gotten where we are without you, for sure. There's no way at all we could have gotten to where we are without you. And that means that all of you who have benefited from hearing our updates, using BillCam, following DailyClout, we owe it to this lady and to a few other brave pioneers and patriots. Charlotte Walker, thank you so much for sharing your expertise about the CARES Act, and your incredible op-ed will be up later today. We'll send it around, and thank you so much for joining us. Be safe and well.
You too. Thanks, Naomi. Bye.